Hey, good morning. Good morning. It is Thursday, March 30th, and before the market opens, right now it's 6:31 a.m. Central. I want to show you the direction guide template and go over the components again because I think you'll find this interesting. I've got crude up and I've got a medium term Unirinco. I think there was some confusion on the internet by one of my colleagues about these Unirinco bars. They do pick up, my bars pick up trend and indicator settings exceptionally well because there is a zero offset, and unlike a regular Rinko that puts you in the middle of the high and low of the previous bar. My bars put you in on the close or one tick away from it depending on slippage. That's normal market slippage. Just like when we were trading the Brexit vote yesterday, you put an order in, you're a tick away. That's just normal. That has nothing to do with this bar close. Um, but I can turn on the dime, and that's what I want from these bars. And I will show you if we are going short, you can go short. If you want to go long, you go long at the right time, getting you in that direction after these pullbacks. And that's what you want as a trend trader. You want to get in after a pullback, and I require a few things to go directionally short or long, and that's what I want to talk to you about. Another thing that these bars are excellent for is to show you the cycles, for instance, from the pivot high to the pivot low. 48 ticks, you would expect to see that range to the tick. Look, 48 ticks. Um, and then you get your launch. That doesn't mean that it's going to continue the entire 100%. It could get to the 50% and then fail back down to this other level. This yellow band is the Fibonacci from yesterday's move. The dashed line is your halfway point. So this is just a visualization. I've got the most important component of this chart is down here. The green and red bands show me to stay in this direction, long or short. Right now we're in a short direction. So I would disregard this long bounce, waiting for my second short setup to push me back down into these Fibonacci areas. Um, but this is the prior day high-low and the current day high-low. So let me show you a few tricks what you can do with the Unirinco bars. First, because I have a 48 tick cycle, I want a 48 tick range. And so you can take your tick trend and reversal and slice that up. So 48 ticks divided by 2 would be 24. So you can do a 24-24, for instance, and get a bigger picture of what this move might look like on a middle candle. And so that's what that looks like, and you can see that we're still in this long trend. So on the long trend, we're still going up despite this short-term pullback of the current high-low. But that is an important pivot, and I will show you that in just a second. So generally, when you're traveling in this direction, that's the only direction you want to trade intraday. So you drop down to your lower time frames using the market analyzer as a second confirmation. We're trying to find markets that are running all the way across weekly, daily, 60, 15, and then we wait for that net change to get positive before getting in and then taking trades in that direction for a trend continuation. But of course, I always start with my higher time frame. So the highest time frame of that cycle looks like this. If you want to split it up instead of 24-24, so 48, you can do like a, let me see, a 10. I changed, oops, hang on one second. My other charts are trying to load the yen. There they go. I'll put it back on crude. So you can do like a 1038, and I'll show you what that bar type looks like. Um, And just depending upon how you get your bar set up, this is more of a line break bar. Let me put this back on crude. Sorry about that. When you touch the market analyzer, it will flip your charts over. Okay, so here's crude. So you can see the different bar types have a different pattern. Um, I prefer um, this higher um, reversal on the higher time frame and the midterm on the lower time frame. So I'll show you that in just a second. So here's our 48 tick range um, for that cycle. So that keeps you going directionally trading, and that's what we want when we're trading to a target. Um, and let me show you the other things on this template real quick while I've got it loaded. Um, like I said, I've got the current pivot high and low, and sometimes you laugh, you think, well, if you can't figure out where the current pivot is, if it makes a change, well, sometimes it does make a change and it's hard to see. So I show it very clearly right here, current day high low, and when you get ahead on that location, you can see the potential changes can occur. And right now we're in a second current day high low bringing us down. So I wouldn't get long here is what I'm saying, because we're on a current day high low down and we're at the prior close with the prior high right sitting on top of it. So you can see that we're probably going to be ranging between the prior day high and this current candle low. Could go for a breakout here, but right now it's not giving me a permissive to get long. I'm going to just be sitting here, sitting on my hands, waiting to see if this does flush back down into the Fibonacci area or potentially lower before turning around. So because I have my short signal, I know I can sit on my hands and not get active in this trade just for this system. And then I have a prior day high-low. If you just want to trade the meat, if we're looking for those range expansion opportunities, like yesterday was, to get long and know that you can put the pedal to the metal, this is your range expansion opportunity right here. You can just set your platform up to see just that move. And of course, if the other layers are firing off, your core trend direction, your current high-low pivot, the core super trend, and here's my core super trend. And I call it the core because it's the core of this strategy. Open to close, high to low, relative price relative to the prior close, and some other momentum um, and trend algorithms that I have in this template. So that if you can limit your trades to these times of your core super trend, you can increase your odds of trading. Obviously, if price is going sideways in a range, just printing straight flat across, see that moving average? It's this moving average is sloping down. That's what you want. When it starts to print sideways, you sit on your hands because it's just going to chop up your account. You want to see a nice slope on that moving average to get where you can just hold a position until the end of the close. Those wide range expansion days. In this case also you can see these prior closes start getting hit and exceeded, and your closes are moving up. So as long as we keep printing higher closes, we're going to be in good shape to get our 5013 or higher going into next week. So this is the template. Oh, I wanted to show you, let me put this back down on 4.8. And I will show you some intraday entries on the lower time frame on how to get long. after the pullbacks, or just use your lower time frame chart over here, even lower, to engage the market. And I use other things that help me see where I am locationally um, relative to these Keltner channels. Price tends to stay inside these channels, and so when I'm outside, like yesterday moving down, ideally you want to wait for a reversal on those channel lines in the direction of the trend, or just, buy as close to the super trend band as you can, or the other Keltner mid band, and hold it. That's how you trade a trend day. Market will, you might jump on here, but you just have to hold it with your stop above the super trend band. Very simple. That way you're not having to jump in and out. But the key is to recognize when a trend day occurs, and here we go. And this is your example going up. Just try to buy as close to the super trend band as possible, and take your longs at that point. Any one of these, but just hold on. Trading the trend band and the Keltner channels as close to that bottom channel as possible for these entries in an uptrend. A lot of people will take the mid band. I will not take an outer band trade. I wait for a pullback, mid band or lower band. And then see here, we're starting to get longs firing off again, but we're getting up to that top band, so I'd be looking for a pullback. And then I have the volume ladder, which is key. I've got it set on, this is way too tight. A lot of people will use an 8 tick. I think a 6 tick is fine. That gives you a tick of slippage on that 50-cent move. And so this helps tremendously. You can see the volume on the ladder. You can see the volume box. It's the same thing as that theory of the close. As long as volume keeps rising, and you can see that on each one of these boxes, the volume bar, the volume level for each one of these 7-cent ranges, 6 cent, 6-cent ranges. Here was one tick slip, but then it quickly corrected, came down and touched the 25-cent low, the 25% low, and bounced right there on the dime, and then bounced up, flipping the volume again, and you're keeping the delta. You've got a big stack of positive volume delta here. Your high volume node is at 49.39, and I've got my direction guide template behind here, which flips with price. See how choppy it was there? So I use my direction guide template, and this works real well to keep me also directionally positioned on the volume bars. So I guess the delta bars, because I have this running delta. So on the bid and the ask. So here I have my system. Use your magic Keltner channels, or whatever you like. I have a Bollinger Band template too. And use your previous day high, low, and close. Use your Fibonacci, and then just try to position yourself in trades. Don't trade along here. I mean, just use common sense. You want to wait to get a value for your proposition. So wait for it to return to the average and get in, or to the lower band in a correction or pullback. And use your higher time frame bars. So I just wanted to correct my colleague who said that you cannot get moving averages or other indicator settings off of these bars. You can off of the custom Unirinco that I use that has that zero offset. I do want to show you one last chart that's very important, and give you some more background on about what's coming. Gomi is going to be opening up his plots for BloodHound. I'm so excited. So I'm going to be getting more opportunities to get signals on the bid and the ask from the footprint. And then I can take that signal from the bid and the ask on the delta. I can do all my ratios and get more signal inflections with momentum. So that's how I want to use it. I want to use it with momentum, and my other BloodHound skills, and finalize my algorithm with the help of the Gomi Delta signals that I'll be getting. So Gomi, thank you so much. He's going to be opening up plots for me on the volume ladder, and so I will have delta and volume to add to my BloodHound template signals. So I'm looking forward to that, and you should be getting more information about that soon, so I'm very excited. Thank you, Gomi, very much. And y'all have a great day. I got to send you over to the website now and talk about the risk disclosures, because trading can be extremely risky. Just ask Bill Ackerman, who just lost his investors $9 billion on the Valiant pharmaceutical trade that was just announced. So be careful. Even if you give your money to Bill Ackerman, you could lose $9 billion. Bill, seriously? Hypothetical or simulated performance results do have certain limitations. We're showing you charts that have happened in the past. That does not mean that it's going to happen the same way in the future. And y'all have a great day. Thank you so much.